Head of the International Monetary Fund, Christine Lagarde, has issued a stern warning to global leaders here at the World Bank IMF meetings. Christine Lagarde says that world leaders really need to do more to tackle huge government debt, huge bank debt, as well as strengthen those corporate balance sheets. She says that this is really pivotal to do because the last thing the world needs is to experience another global financial crisis like the one seen back in 2008, or perhaps even another Eurozone debt crisis for which, Phil, some countries around the world are still paying the price for that.
You're there on the ground talking to participants and also other leaders from around the world. Is the IMF more worried about the US or Europe, or is it the emerging economies they're more focused on?
That's an interesting question. You know, from an IMF perspective, they're concerned about the whole globe. What they have been really stressing over the last few days is that global leaders need to do more and implement deeper reforms in countries like the United States. Emerging nations need to implement more buffers, and even countries like Japan need to implement more regulations. But I guess if we had to pick one region that was really keeping the IMF officials up at night, it would be Europe, and particularly the Eurozone. Take a listen to what Christine Lagarde had to say earlier today.
We are concerned about this potential risk in advanced economies in general, in the euro area in particular, where we know that prolonged low inflation would hurt both growth and jobs. And in this context, it is encouraging that the ECB has reiterated its commitment to use unconventional measures as needed.
Low inflation is really the biggest concern facing the Eurozone at the moment, because what low inflation does is it leads to lower growth, lower wages, lower jobs, and overall more instability for all the countries around the world.